As we are counting down to the end of the month, the end of the financial year and the end of the March series as well, news flow has just started to intensify. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormas Fatakia. With me as always is Vivek Iyer. And just as I mentioned, the news of Bharat Dynamics flashing on your screen, a 4,500 crore order that the company has won from the Defence Ministry. But the markets though taking a bit of a breather today, particularly the benchmark indices 100 points lower on the Nifty. But after a 7-day move, you would kind of expect that as well.
Good afternoon, Hormaz. Absolutely right. The benchmark indices, the broader end of the markets, all of them taking a bit of a breather after the very sharp run-up that we saw in the week gone by. Like you mentioned, it's Bharat Dynamics. Given the fact that we are nearing the end of the financial year, what's actually transpiring is a whole host of companies. Number one are bagging orders. Awards are getting, the LOIs are getting converted into orders. So NCC, L&T, Bharat Dynamics, an important update on HAL. So whole host of order inflow, especially in the last week of the financial year of FY25, is what we are witnessing.
Oh, indeed, and there's a lot lined up as well. Now take a look at the headlines that we are tracking other than the order inflows, and these are what we are on the radar at 1:30 this afternoon. The markets have slipped to the lowest point of the day after a quiet start. The Nifty is below 23,600 now, nearing 23,550. The Nifty Bank is also seeing cuts of around 350 points. Pharma and financial stocks are seeing some bit of profit taking, while auto and select metal stocks are holding on to gains.
Big boost to Hindustan Aeronautics as GE Aerospace delivers the first F404 Iron 20 engine to HAL for Tejas light combat aircraft.
NCC has climbed in today's session, as Vivek was mentioning, after the company bagged two orders worth nearly 11,000 crore rupees from the BSNL.
REC falls in trade after the board approves a 1.7 trillion rupees borrowing plan for the financial year FY25-26. This is a slight dip to last year's borrowing limits.
And Ashok Leyland shares have surged over 3% ahead of its board meeting and an analyst call which is scheduled for later in the day.
Well, welcome to Midcap Radar. As we can see, in the last half hour of the session, what has actually transpired is that a whole host of stocks and both the broader end of the markets have seen significant selling pressure that have come about. The Nifty now near the lowest point of the day, the mid-cap and small-cap index over there, if you see, the market breadth or the advance to decline ratio is now firmly in favor of the decline. So, which are a few stocks that have seen some selling pressure emerge? Well, REC, one stock that we just mentioned, that stock is now near the day's lowest point, almost 3% lower. An important update coming in as far as FY26 is concerned in terms of the borrowing limit, which is a slight, slight discount to what the street was anticipating. On the back of that stock almost 3.5% lower. But Hormaz, has stepped across to the wall. This is our special segment, Midcap Movers. He's looking at all of the stocks that are buzzing in the broader end of the markets.
There's a bit of a yawning gap now in favor of the declines, but we'll start off with the top losers then from the broader markets, barring the ones that Vivek just highlighted. And Chola Finance is one of them, 5.5% lower in today's session. KFin Tech as well, Credit Access, Grameen, Sterling and Windsor, all of them down to the day's lowest point, losses of anywhere between 3.5% to 5.5% in today's session. A lot of the companies have seen their shareholder lock-ins come to an end. We just mentioned that a few minutes earlier. And Carraro India now is down 8.5%. Ventive Hospitality is down 5%. Tollins Tires is down 2.5%. Most of these shares, Carraro and Tollins, are down 50% from their IPO price as well. A lot of the newsmakers are in focus back on the back of the order wins. We just spoke of Bharat Dynamics and NCC, but Siemens is possibly the stock of the morning and the day as well. 7.5% higher now at the highest point of the day. HAL 2 at the day's high at 4%. And Ashok Leyland, of course, the stock in focus ahead of the big announcement that the company is likely to make. Stocks that are doing well on the back of strong volumes in today's session include the likes of Capri Global, the top gainer on the Nifty 500, 9% higher there. HEG continuing to build on to yesterday's gains. EU Small Finance Bank and Affle India too seeing gains on the back of strong volumes. And lastly, some names that are at a 52-week high in today's trading session include the likes of Aavas Financiers. SBI Cards is at the 52-week high as well, as is Chambal Fertilizers. So good going for all of these names in an otherwise weak market, Vivek.
Thank you so much, Hormaz. While we wait for you to step back to the seat, it's a good time to welcome Jay Thakkar from ICICI Securities for a technical check on the market. Jay, thank you so much for joining us. First up, do you see that this particular brief pause as far as the rally is concerned, do you think this can, does this have further downside legs, or do you feel it's just a brief profit booking that we're seeing? And also your top picks for the day.
Very good afternoon to you, Vivek, and good afternoon to you, whole market. Vivek, as far as the markets are concerned, as you rightly said that after such a sharp run up on the upside by almost 6 to 7 positive trading sessions, obviously when markets were falling, we were discussing that there is a straight 8 to 9 days of fall, so there is a high probability that in past has not happened. So that the index has not closed more than 9 to 10 trading sessions on the negative side, so there is a chance of a bounce back. Likewise, after such a sharp run-up, a pause can't be ruled out, and the pause has come from the levels wherein the Nifty had started. It's a last leg of the fall, from 23,800. So I would say that this range of 23,800, 900, or probably even 24,000 will act as a short-term resistance until those levels are taken off convincingly. We might see some profit booking, we can say, from the low levels, or probably some consolidation within this range of 23,800 to downside 23,200. Right, so that's 600, 5 to 600 points range, which is nearly around 2% on the index. And I believe that once this consolidation, whether it is a consolidation or it's a sharp correction within this uptrend, once that's over, we'll again see Nifty resuming its uptrend, because I think that eventually in the April the probability of witnessing 24,500 is quite high, because overall the market has improved. The FI participation since past 4 trading sessions have really improved. So I think that trend has changed. And due to that change in trend, because of a lot of short covering also happening and is the expiry, probably most of the rolls short doesn't even get rolled in the April series. So looking at all of these data, wherein the IEs are also at a very comfortable level, we are not seeing any bounce in the IEs despite market correcting. I think that clearly indicates that further release strategy of 24,500 is likely going forward. Hence, buy on dip should be the strategy. As of now, I have 2 buy recommendations here. The first one is on Motherson Sumi. Technically, it has some inverse head and shoulders pattern, but I think that on the upside, 145, 150 looks quite likely due to short covering. And second would be a long or a buy recommendation on Colpark, that is Colgate Palmolive. It's trading around the levels of 23.95 on spot. I think it can go and test the levels of 25 to 25.70 in the near term. I think till 23.40 levels are healthy.
Jay, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. We take a short break. On the other side, we're joined by the management of Ashiana Housing to talk about their Ashiana Nitara project. Stay tuned. We'll be right back.
That we could see Lilly manufacture Mounjaro in India anytime soon?
It's of course possible. We're expanding our global footprint. There's a lot of discussion in the air about localizing or regionalizing supply chains. And as India could become an important market for us, it's a smaller market for us now, but Mounjaro may well change that. Open-minded about possibilities here.
24 was artificial intelligence, generative AI, and its impact across different sectors. What do you think this is realistically going to mean in terms of bringing down the timelines to drug discovery?
Yeah, it's interesting. 24 was the year of GPT and GLP.
Yes,
right. So
that's right. GPT and GLP is right.
Exactly. Yeah. So, but that doesn't end in 24. I think it's accelerating both trends. We're seeing new innovation in incretins and obesity, but also new innovation in AI. Lilly has embraced AI at scale at every phase of our business.
Welcome back. On to corporate conversations. Then Ashiana Housing has converted 293 units into bookings of their project Ashiana Nitara. Now, to discuss the sales opportunity and the outlook going forward, we are now being joined by Varun Gupta, who is the director at Ashiana Housing. Varun, good afternoon. Thank you for joining in. So, out of the 336 units, you have now converted LOIs for 293 into bookings. What about the rest? If you could share a timeline for that, and how has the overall response been on ground for the quarter as well? If you could shed some light on that too.
The rest will follow into the new year, probably in Nitara, we will have to do some sustainable sales. We'll add another 56 units to the project as well. We are awaiting some approvals to have that, so the total number of units will go up by 56 more. But the overall response in Nitara was way beyond expectations. We had only launched phase 2, but when we got the kind of response, we actually launched phase 3 of Nitara as well. And overall, market conditions remain buoyant and good in most markets that we participate in, except for Gurgaon, where we see now some bookings tapering off and the buoyancy that we had before not being there. That said, I would still say Gurgaon is also doing good as a market. It's just not doing in an incredibly exceptional situation that it was doing 9 months ago, but the market is in good stead, and we think it's doing well.
Okay, Mr. Gupta. So we take your point. You say that there has been significant reduction as far as inventory is concerned. So out of the total inventory as far as Nitara was concerned, how much of it has been booked? How much of it are you awaiting approvals to go ahead and say that by the end of FY25 has been booked? Now, when it comes to realization, a brokerage firm has written that this particular realization for this project is much lower compared to what is the current prevailing market rate as far as that micro market is concerned at 4,400 rupees per square feet. So what is the reason for the reduced rate at which sales were done? Is it mainly a function of demand?
So a couple of things. I don't personally agree with the brokerage firm that this is lower compared to the micro market overall. But it is on the lower end of the spectrum that we were thinking of our launch on. We haven't gone below the spectrum, but it was on the lower end. We wanted to leave returns on the table for some of our customers to book, and that they enjoy an upside in the future. So there is that happening. But overall, given the location of the project, given the economics of the project, we have done well from what we had underwritten the project when we took up the project. So the price is more than what we had expected then. That said, it is on the lower end of the calibrated price that we had done 3-4 months ago. We have another 56 units and apartments coming. So that will be 392 units of apartments total in this. So we'll have about 100 odd unsold units. And I would expect most of them will go into the next financial year. In the next 4-5 days, there'll be minuscule numbers that would be coming in. And we have a few villas still left here. I think a little bit more than 30 villas remain to be unsold, which we had launched earlier in the Tara project in totality. We would expect to wrap up the entire project in terms of sales in the next financial year.
So by that, what are you sticking to your 2,000 crore rupee pre-sales guidance for this year, Varun? And if you have set a number for FY26 as well?
So we haven't yet set the FY26 number. I think in the next 6-7 days, that will be recalibrated and finalized within the first week of April. We will unfortunately miss the 2,000 crore number this year, as I had guided it, dependent on how the Gurgaon market was doing. And the Gurgaon market is not doing as well as it was doing a year ago. So our Amara Phase 5 launch will not be as buoyant as it was planned at the beginning of the financial year.
So by...
I would expect we should be around 1,900 crores, give or take, some here or there as per the final numbers that come out in the Gurgaon project. That we'll get to know by end of the weekend. Because we're still running the EOI process there, and conversions are slated for the weekend.
Varun, what would you attribute the slowdown in Gurgaon to? You mentioned it is not doing as well as you anticipated it to. Are there any underlying factors on the ground that's leading to the slowdown, or is it a demand-specific issue?
No, it's not a demand-specific issue. I think there is a lot more choice to customers today with supply coming in as compared to what was a year ago. And I think there are enough customers, but with choices, they are taking their time in making decisions. So it's not that we don't have enough customers coming in the door. We don't think the market is mispriced right now. I think it is priced properly in terms of ticket size, at least what we have to offer.
Right.
But the customers are taking longer in making decisions because they're exploring more projects than earlier.
Varun, one very quick question. Average realization, FY25, where do you expect it to end at? FY26, will we see a degrowth on account of the factors that you mentioned in terms of competitive intensity as well as supply build-up?
I don't know the exact FY25.
A ballpark figure.
I wouldn't like to quote. I don't even have a ballpark number in terms of per square foot realization across the board. No, FY26, I would think that we should not see degrowth. We will see improvement in total sales as compared to the previous year. As I said, except for Gurgaon, markets are doing well. And as an organization, we are structurally shifting towards senior living. It has been a smaller part of the business, but it's becoming bigger in absolute terms. And in the senior living side of the business, we see a structural upturn and not a cyclical issue. So I think with India's aging population, demographics, and wealth, we see a structural opportunity in senior living going forward.
Thank you so much for joining us. You've given us a clear idea. A slight miss as far as FY25 pre-sales is concerned, but we wish you all the best for FY26. Let's now slip into a short break. We'll get him on the markets and focus on a special mid-cap microscope segment. Stay tuned.
Welcome back and on to our special segment, Midcap Microscope. Then you're putting the spotlight on a stock that has halved from the top but has made valuations relatively reasonable. Or is this a value trap? Nigel is here with more on that. Nigel.
Welcome to Midcap Microscope. Well, today the stock on our radar is Whirlpool of India, a stock that's been on a roller coaster ride. It's dropped nearly 50% from its peak, but after this steep correction, the big question is, how much of the bad news is in the price? Well, what was the key reason first? For the sharp fall we saw in the stock price, the promoter entity, Whirlpool Corporation, announced its plans to reduce its stake in the Indian entity from around 51% to around 20% by the middle to the end of 2025. Now, that's a significant sell down. And this is not their first move. Last year, they offloaded close to around 24% stake for around $470 million. They cited high valuations. But globally, Whirlpool has been exiting various businesses while holding minority stakes in Whirlpool China and its EMEA joint venture. So in that sort of a backdrop, maybe this move isn't entirely surprising. But time will tell, what does it mean for the company's future here in India? Well, beyond the promoter stake overhang, there's another key risk. The royalty and the brand licensing fee, which is currently at around 1.4%. Any modifications here could impact the earnings, and the market is waiting for clarity on this front. But let's talk about the business itself. Whirlpool India's revenue comes in mainly from the refrigerators and the washing machines business. And they've also been expanding in the kitchen appliances space as they've increased their stake in Elica, which now contributes close to around 7% of the total revenue mix. And under the leadership of Mr. Narasimhan Ishwar, well, the company has made quite a turnaround. Their market share in refrigerators as well as washing machines has improved. They've undertaken various cost-cutting measures which have boosted their gross margins. And the working capital management as well has got strengthened. Remember, Whirlpool India's cash in books is roughly around 25% of its market cap. And that's something that investors, they always like to see. Well, moving to the valuations front, the stock now trades at under 30 times its earnings. That's at a sharp discount in comparison to its long-term averages when it's traded at around 45 times. So is this an opportunity or is it a value trap? Well, from here on, there are a few critical factors you need to watch. Will LG India's upcoming IPO have a bit of a positive rub-off on the entire sector? At what valuation does the promoter sell its remaining stake? And most importantly, will the buyer be strategic in nature? Well, it's been a whirly path for Whirlpool India. Plenty of twists and turns. But valuations are now lower. Is the worst priced in? Let's see how this one plays out.
And that was Midcap Microscope. All the details on Whirlpool of India, the overhang of the promoter stake sale. With that, we call time on this edition of Midcap Radar. We leave you with the markets at the lowest point of the day. From Vivek, me, and the team that put this show together, thank you so much for watching. Your stocks on the other side.